analysis. I mean, obviously the market's not going anywhere, but it becomes more apparent when we're looking at charts where you're seeing lots of indecisive days during that sideways move. Can you make the chart a bit smaller? Betsy, you do that off your chart. That was a little, use the little boxes up on the top there. So as we can see, there's no direction to the market. The NASDAQ, a little bit stronger. Bad echo, David. That means you'll have to log off and log right back on. You got the echo tonight. The NASDAQ, as you can see, has just been a nice steady eddy staying above the T line. But the compelling index right now has been the transportation index, pretty much confirming that they aren't selling this market off right now. It's still buying. And so with that idea that the markets aren't really going up or going down, you just have to come back to one simple premise. If there's 10,000 trading entities out there, and using very simple scanning techniques, you can pretty much tell which sectors are acting stronger and which ones are acting weaker. Now, as we saw in crude oil this past week, and this is where you kind of observe the obvious, and it becomes much more obvious when you know what each of your signals is representing. Such as a bullish harami, right smack dab at a major moving average, pretty much tells us what the bullish harami tells us, which is, from the Japanese terminology, is basically the selling has stopped. When it starts back up, that's if you're just trading crude oil by itself, that was a good trade. Or if you're trading the oil stocks, it becomes a good trade. Richard, I'll get to that. And let's see what else we got out here. Oh, gold has been kind of lethargic. That's also in that sideways mode. It had the opportunity of breaking out. And this, again, is where we get to observe the obvious. There's an obvious resistance level right here. And what happened once it got there? Bearish harami. Telling us that they aren't going up through, that we're still in this sideways mode. Oh, Rick, can you help Todd? Isn't it a flag? Oh, I don't know. If you were looking at gold, I'm looking at just a sliding trend. Trying to think of what else. We've been short cattle. It's just never been able to get back up above the T line. And the grains have just been kind of soggy. Not really anything too dynamic on the grains. And cotton, kind of the same scenario. Coming up, but it's a very, very slow uptrend. All right, so because we can see visually what some of the underlying essentials are in each sector. For example, gold really not going in any direction. However, crude oil showing a strong move to the upside. puts us in a position where we start looking at where we had been starting to buy the crude oil stocks. Now, some of the ones we recommended this week, Guro, which is a left-right combo, a gold stock, left-right combo off the 50 area, gap up, just very simple common sense that if you start seeing stochastics in the oversold area, candlestick buy signal, and they start gapping it up, that pretty much tells you they want to get back into that trend with great enthusiasm. And that's exactly where we want to be buying, is when we see a buy signal and the enthusiasm for that trend reversal coming in pretty strong. That one has worked out well. We were started going after CRVV or CVRR because of the very simple pattern it was setting up, where it came up, did a J-hook pattern. There's your inverted hammer, your ultimate inverted hammer, which is your gravestone doji. And you can see what you're looking at here, big fry pan bottom. Things starting to head back up. We recommended GNCA today off of that same type of pattern, a J-hook pattern breakout. So we're in wave 3. This is where you can obviously see that wave 1, wave 2, wave 3 is going to be the same magnitude as wave 1. ARLZ, we're just kind of going real quick through some of the positions we got. Look at the again, this is where you observe the obvious. If you recognize what the pattern setup is, and you can much more clearly evaluate what's happening when it gets to our T-line support level, this is where you can start buying, because what's it telling you basically? If the J-hook pattern's in progress, where was the failure spot? Right here. If it failed and came back off, you came out of the position. The fact that they did a doji sandwich out of that area pretty much tells you they're still taking this one higher. ARLZ, a crib, a cradle pattern. Is that what you're? No, remember a cradle pattern is usually at the bottom of a downtrend and starting back up. This is just pretty much anytime you see that flat series of dojis and then they tell you which way they're going to go, that's usually after that indecision, pretty much telling you what the decision is. Now we closed out Cena today because it had a nice pattern. There's your J-hook pattern. Then we had some selling off on yesterday. It wasn't that pronounced on the other chart systems, but the fact that they gapped it down, and again, notice where the selling occurred. After they started moving a good distance away from the T-line, they gapped it up. Anytime you see a gap up in the overbought condition, start watching for profit taking. Because where do most people buy? They buy exuberantly at the top. Is that an island reversal? Not necessarily now. Usually an island reversal, you're going to see a good pronounced gap up to get there and the gap back down. Let's see. I know you usually wait to the end of the day. Did I sell on the open? Yes. I took a little bit off, Robbie, on yesterday because it was not acting well. So I closed out, I think, about a third of the position. And then when they took it down today, I closed out the whole thing. Okay, some other ones that look good right now. I think, oops, I've got this one a couple times. NXTM. This is, again, where you observe the obvious. Notice the dojis. And where did it occur? Right smack dab on the 50. What happened after the doji? Bullish confirmation, stochastics coming up. Where's your likely target? Probably right at the top of this trend channel, which gives you a good percentage move to get back up there. Now the oils, because crude oil has been coming up nicely over the last few days, there's lots of good looking oil charts. There's SN. What do we got going on here? Another breakout of a wave 3, wave 1, J-hook pattern, wave 3. So if this moved from basically the $6 area to the $9 area, this should take you up into about the $12 area. Whiting for longer term holds. We started picking this back up once it came back up through the 50 as a trader. We didn't buy it here, but this is probably a good place to be starting to pick up whiting. Let's see. I'm going to take a look at this bigger chart. There's some gaps up here that could still produce a good 30-40% upside potential just to reach those gaps. Oasis we recommended a couple days ago because it was coming back up doing a J-hook pattern. And notice what started the J-hook pattern potential. Kind of a little hammer gap up through the T-line. So even if you cut the chart off right there, you can see it was starting back up doing exactly what we would expect it to do, which is the J-hook. Now that's also, you have the additional confidence of buying some of the oils because you can see that crude oil was starting back up again. CWEI, same scenario, another good looking chart. We recommended EMES today because if it opened positive, where was it opening? Above this level. Had a good move in this one today. So there's wave 1, wave 2. Notice how this started back up. There's your left-right combo. Left-right combo is a very strong reversal signal. It's your doji followed by a bullish engulfing signal. And in this case, using convergence analysis, where did it occur? Right smack dab off the 50. Where did it close? Above the T-line, a positive open. Now you've got a doji sandwich after a strong buy signal. And what do we know about a doji sandwich? There's going to be more upside. And if there's more upside, that means if they break through this level, that's additional confirmation that wave 3 is in progress. Let's see, did everybody lose sound or just Bill? We've been in Ren for a while. Took some profits up here. Got back in because there's that left-right combo. Now a breakout. So if wave 1 was 12 points, look for this to move up into about the $32 range. All right. Just let Bill know that must be coming from his end. So here's just a few to take a look at in the oil area. Whoops. There's your doji gap up. There's kind of your scoop pattern. At least your first target should be the 50-day moving average. That's on Haas. And SGY had been doing a big rounding bottom. Another one that you can be buying on positive trading tomorrow. Notice again the gap up through the 50. Next target should be up here toward the 200-day moving average. LPI, gap up through the resistance level. Wave 3 is in progress. It can still be bought. Okay, let's see a couple other charts that look good today. Again, this is, first of all, notice the big belt hold bullish engulfing signal that reversed this. Then notice where they pulled back to. This is why we have a tremendous advantage over most technical analysis with charts that tell you exactly what's happening in investor sentiment at important technical levels. So there's our morning star signal. And again, look where the doji occurred, right smack dab on the 50. I mean, that's not coincidental. That's because everybody and their brothers watching to see what this stock was doing at the 50. And they were selling and buying at that point, indecision. And then finally they told you what they were doing with that indecision. And where did this all occur? When the stochastics were down here in the oversold condition, making this a very high probability trade setup. So if you didn't buy it today, you still have the analysis of a little scoop pattern, which tells us if they break out, you probably have the same magnitude again of a slingshot move of this move. Oh boy, Willie, I don't even know the answer to that. I know the 12 is the time frame. I don't know what the 3-3 stands for, but just if sometimes, or that's a good place to ask that question is in here, how yeah, how to set up your stochastics on any of the trading services. Most of the I mean, we got everybody using all trading services on the in the chat room. BLCM. Again, this is just visually observing the obvious. There's that scoop type pattern, and where are we? We're right at the breakout level. So if this opens positive, where do you think the next target is? At least up here. So the worst case scenario, at least if it fails right here, you can still come out of a bad trade with a positive result. Now, not only did the oils start working well, but your biotechs are starting to come back. Things like blue, nice pop-up, break out of this level, will tell me there's probably a slingshot effect back up into this trading range. So that was all evident in the Labu chart. Same scenario. Notice where it turned back up. Doji on the 50, followed by a gap up through the T line, then the next move up to the 200. Now we're right at this level. I would suspect we're heading back up here, which means your individual stocks in the biotech area are going to be acting very well. Johnny, the searches, all our searches are already on TC 2000. The formulas are on our website. If you go to www.candlestickforum.com, if you go to the left-hand column and look for candlestick formulas, it'll probably take you to the TC page, and all the formulas are right there. Now, all the formulas should already be on their new system. You just track them down. So using candlestick scanning, yeah, they are also on Thinkorswim. Using candlestick scanning, all you have to do is refresh each evening, and probably if you are fairly new at candlesticks, it'll take you about 20 minutes to come up with the best trades for the next day. It usually takes me anywhere from 5 to 10 minutes doing a search to find the best trades. There's another scoop pattern in Tesoro. Be ready to buy this one on positive trading, and if it breaks out, probably another move same magnitude as this. Let's see, that was that one. Oh, MCRB. So the reason I'm pointing out these different sectors is to improve your probabilities of being in the right place at the right time. If you know the market's not doing anything, but you can see which sectors are acting the strongest, that means, and you can see a lot of good charts in those sectors, that means those are the sectors everybody's buying. We just happen to see visually that that's what's occurring, and can usually be in these situations a lot earlier than most other technical charting will get you there. Here's ARWR, another J-hook pattern in progress. You scan for certain patterns. Jeremiah, usually after a while, your patterns are going to set up automatically on your scans, just visually, that you might see from a scan of a certain signal, you see something and it says, oh, this looks like it's a pattern setting up, so you keep keep it. You already have it on your watch list. And worst case scenario is you're going through. My most simple scan is which stocks had the biggest percent move today. And usually within the first 20 charts, you're going to find 4 or 5 of your best trades for the next day. A lot of people ask, well, you trade off of volume? And the answer is no. And I don't have it here, but there was a big volume spike on this day. So if you can see that there's a big change of ownership at a candlestick reversal signal, notice our Morningstar signal, that's usually a good indication that a lot of the weak have sold out to the strong, and that there's more evidence that there's been a reversal. So all this is just, a lot of it is just visual. Notice your low fry pan bottom. Notice your T-line crunch. Notice your breakout. I mean, this is not rocket science. Where do you think everybody was watching? They were watching the 50 to see if they could get through. They couldn't. They couldn't. But notice what was happening on the T-line. It kept pushing it up through that level. So when it broke out, now there's a whole new dynamic in this stock. There isn't a resistance level anymore. People are going to be more apt to be buying it. Let's see. BG. Whoops. FV. Again, this is just where the breakout is. You can see the slow curve. I make my biggest money on slow curve breakouts because one of two things are going to happen. Right about in here, if you're buying, if it fails, you're right back out of the trade. If it goes through, the probabilities of a breakout occurring is not only going to produce you a good trade, but a very good, strong price move. Paul, that's up to each individual. I trade a lot of stocks, usually in my bigger accounts, and I'll trade options in a couple of my smaller accounts. Many of these stocks are very thin volume-wise. Depends on what you consider thin. My scans are for any stock that trades more than 200,000 shares a day on average. Now, obviously, if I've got a $5 stock, I want to see it probably trading 4, 5, 600,000 shares a day. Or if I have a $50 stock, I'm not going to be too bothered if it trades only 125,000 shares a day, because I'm on a $50 stock, I'm probably only going to go in for 200, 300, 400 shares versus on the same dollar amount on a $5 stock, I may be able to go in for 10,000 shares, but I don't want to be buying 10,000 shares of a stock that only trades 200,000 shares a day. So my volume criteria is that I want to see at least on average 200,000 shares a day. So any of these that you see will have that volume and greater. Again, that changes my universe from the 10,000 stocks that are out there, knocks it down to maybe 2,500. Now, again, those are stocks greater than 5 and trade more than 200,000 shares a day. Out of 2,500 stocks, I'm going to have more buy trades or more short trades than I'll ever be able to handle. And I don't have to worry about the liquidity of getting in and out of them. Let's see, what was this? ASC, shipping company. Notice the scoop type pattern. And notice how they moved it today. They kind of gapped it up. They used the T-line once more as support. So anytime you see that they're using the T-line as support and still trading higher, remember, very, very few, which probably puts it in the category of hardly anybody, nobody, has the T-line on their chart. So when the T-line is acting as a support and resistance, that's kind of a natural human support and resistance level, just like a Fibonacci number. So the number one thing that provides the best confidence for me is if I can see graphically what's going on in human nature, and I can see the T-line, which is actually a human nature natural support and resistance level, like a Fibonacci number, then that just puts the probabilities that things are going in my direction that much greater in my direction. Robert, usually I don't have any more than 10 positions, and for a very simple reason. I think it's Susie Orman said you shouldn't have any more than 4% of your money in any one position, which means you should have 25 positions on. Well, most people can't, even the professionals on Wall Street, they pay analysts millions of dollars to follow 6 or 8 stocks, and most of them can't do that very well. There's no way we can follow 25 stocks logically or reasonably. So I use 10 positions, and that's for 2 reasons. One is that if something devastating happens to one of my positions, it's only 10% of my portfolio. It's not going to kill the whole portfolio. The other side of it is each position is 10%, so I give it a good scrutiny when I look at it, because I know it's going to affect my my portfolio. So I can look at 10 positions in a matter of a minute and a half, not even that long, and know whether I want to close out one. Okay, good, Jason. Yes, the T-line's the 8 exponential to moving average. My average duration of a hold is anywhere from 2 to 10 trading days. Now, obviously, if you catch something that doesn't close below the T-line for 4 weeks, you're going to hold on to it longer. Oh, Dave, I don't publish them as positions. We put out 2 or 3 stock recommendations every day in the members area. And usually when I'm bringing up, I'll do trades during the day where I have to just bring up my trades platform and put on a position, or so we're usually going over in the members area during the day, or on Monday night member area. We're usually going over the positions that we have. Now, because I'm doing 2 or 3 recommendations every day, obviously I can't do all the positions. So that doesn't mean when I recommend something and I don't buy it isn't because it's anything wrong with it. It's just I can't carry 30 positions if that's what 10 or 3 recommendations a day is doing. So we pretty much it kind of is like a natural evaluation of the positions that are open constantly. What's your overall ROA on average per month, Robbie? That is always based on what type of account you're trading. Obviously, the big accounts don't get as good, but being a little bit aggressive, meaning if I could be trading constantly without other things going on during the day, there's no reason why you wouldn't, or I've done it before, be able to make 10% return monthly. So if you compound that out annually, that's 312% return. You stay in a position as long as is above the T-line, yes. Exit strategy is seeing a sell signal that may be moving too far away from the T-line and seeing a sell signal, because what's our logical conclusion of the T-line? The further away you move from the T-line, the higher the probability it's going to come back and test it. Yes, $500,000 account, I'd have 10, $50,000 positions. If I have on a bigger account, maybe I'd push it to 12. But the nice thing about having or using the T-line is on a position like this. Let's say we were long from this Morningstar signal here and started buying. This is what you call your McMuffin. There's your Morningstar signal. followed by a doji sandwich. And we know the doji sandwich means there's more upside. We know the morning star signal is a reversal. So the morning sandwich we call a McMuffin. And it just has a high probability that it's going to be moving higher. Yes, the 50, the 200, the 20, trend lines, Fibonacci numbers, anything else that people are watching becomes a credible, that's not the right one, becomes a credible trading mechanism or situation. We were long YY right in here. Again, there's your doji sandwich breakout. Where was our first logical target? Up here at the 200. Notice what happened when it got to the 200. They gapped it up in the overbought condition. And what do we know about a gap up in the overbought condition? That's usually the exuberant buying. So we took our profits here. And then notice what's happening right now. It's coming back up. And this is what we call the bobble, which is they hit a resistance level, in this case the 200, and they pull back. And the bobble, that means they've bobbled it in here. Now, if they come back up through this level, we know that we have wave 1, wave 2, wave 3 in progress. A high probability trade setup, especially if they break out through that through the 200. So that essentially becomes a J-hook pattern with a lot more easily visible criteria that they failed at the top, and then they went back through that level. Unlike a normal J-hook pattern, you come up and kind of pulls back. This area right here becomes your breakout area going into wave 3. But if you've got the moving averages on there, it becomes that much more credible. A doji sandwich is, I may find one. I'll find you a doji sandwich here in a minute. I'm in YY. Where do you place the stops? All right. This is where candlestick analysis logic comes into place. If we are analyzing this as a bobble and it should be breaking out, where do we